As the cost of living continues to rise for everybody across the country, a recent survey states that 25% of retirees may be considering delaying their retirement due to inflation. So what can those in or near retirement do to better insulate their savings from higher prices? Well, joining us today to discuss that, Gary Mattson and Taylor Stewart, part of the Mattson family of financial services, right? A firm that's been helping people retire successfully right here in West Michigan for decades. You can also catch them on their popular radio show, Money Mentors. Gary, Taylor, welcome to the show.
Thanks.
Always
great to be here.
I love it when you guys are here. So prices are rising. We were just talking about how everything's going up or the products are getting smaller. But the short story, more money come out of the pockets, right? So for those in retirement, nearing retirement, what are the best steps for those in retirement to protect themselves from that?
Yeah, so one of the big things that we see now is, especially in the market that we're in, you know, we've been very volatile this year. The bond market's not been performing as well because we've had those rising interest rates. So your traditional securities, where do we go? Where do we go for safety? Where do we go for growth? Now we need to look at asset classes that have a good yield, right? So things like real estate, private equity, and some other asset classes that are generating that yield so we can maintain our income. Or if our portfolio is taking a hit, it's helping relieve some of that pressure. So if we're pulling dollars out, we're not pulling from a negative position, making sure that you have your income bucket set up. You know, we always say we should have 12 to 18 months worth of income set aside where we know, hey, it's real low volatility. It's going to be a lower growth type of portfolio, but the point being is that money is going to be there. So if we see something in the marketplace like we saw in the last 6 months, where we know that, hey, for the next 12 to 18 months, we've already got our income set up. Now it alleviates a lot of that pressure off your portfolio, and then we can readjust. And then taking a look at things like your everyday living expenses. Are there some things that we can cut out? You know, trim the fat. Not living on that budget and pinching pennies necessarily, but trimming the fat. You know, we all have subscriptions, you know, nowadays for all your streaming apps, right?
Right.
And especially our household with the little kids, we've got Noggin, we've got this, and how often are you really watching some of those things in other areas in your budget to start reeling some of that stuff back to help save some of that money as well?
And you see, it sounds like you have to structure this in a certain way, Gary. Explain how structuring and putting the money in different places is so important.
Yeah, like Taylor said so eloquently, is that there's alternative assets other than just stocks and bonds. Mm-hmm. And if you go back the last 22 years, stocks and bonds as a class by themselves have all gone down 7 times. That means a third of the time in the last 20 years, your portfolio went negative. So we feel very strongly that we want to bring other types of assets into that. Mm-hmm. So again, we're going to have stocks and bonds in there, but we're going to bring into these facet of other assets. It can be commodities, foreign currency, real estate, private equity, and then other assets areas so we make sure that you don't have losses when it takes to coming income. And that's what we do as portfolio. We review those portfolios on a regular basis. We're adjusting those. We have clients that right now are making money in the market. We're taking that money, putting it on the sideline for future income. Mm-hmm. We have clients that are doing things that are saying we're not going to travel as much as we're doing right now. So in the future, it may cost more. So we're putting those areas into getting maybe a little bit more return on those in the future. Again, equities that are paying dividends, great source of income for the future too. So it's understanding that we're just not placing and forgetting it. It's making those adjustments along the way and taking advantage when the market goes down. 7 times negative, if you bought every time it was negative, what would your portfolio look like? That's who we are. That's what we do for our clients.
And a lot of this stuff, if people might be listening, it's going over their heads, right? Because we don't live in this world that you do. So it's good to know that what you just said, we're not just sending the money over where it's going to sit. You're going to forget it. It's going to get a certain interest rate. You guys actively manage your clients' money.
Absolutely. In fact, we're doing it on a regular basis. And I'm talking about regular, I'm talking about we're looking at things daily. Our portfolio managers are looking at things even closer than that, but we meet with them, go over different structures of what we're doing, and we want our clients' money to be there when they need it. That's the most important thing when it comes to retirement. It's not how much money you've got, it's how much income you get to spend.
And honestly, most people don't know what's happening in their portfolio, right? I mean, we're not just checking this stuff every day, day in and day out. So to have you guys handle it is a real blessing. What's the first step? Somebody watching this right now and they're like, okay, I like what I'm hearing. I want to get involved. What do they have to do?
They need to call our office, and it's going to be one of our team members. So if you've saved at least $500,000 or more for retirement investing, then you want to call us. And if you're in retirement or getting ready to retire, this is the time that you really want to have a review because there's a lot of opportunity out there. So call 616-514-3831. And for the next 5 callers that do that, we'll happily sit down with them, schedule an appointment, do that review, and then we give everything to you in a written form. So not only can you digest it and take it with you, but we're going to educate you. That's why we call ourselves Money Mentors. It's about the education piece.
That's perfect. I love that. So maybe you're watching right now, you just got a question, right, that you need answered. And maybe you don't want to take any drastic steps, but you need some information. Well, that's a great first step and a great offer. Thanks, Gary. Thanks, Taylor. Appreciate it. For you at home, if you're worried about those rising costs with that inflation and what it means for your retirement dreams, take advantage of that special offer from Mattson Financial. Gary, Taylor, their team are going to sit down with you, do a complete evaluation of your financial outlook, and develop a comprehensive retirement plan to get you where you deserve to be, living your dream retirement. So don't let that offer pass. It's available complimentary to the first 5 callers today. Secure that spot now. Call 616-514-3831. That number again, 616-514-3831.